name is Alex Heath. I'm the president and CEO of Ethos Gold Corp. Ethos Gold is a gold-focused exploration company with 9 projects throughout Canada, looking to make large discoveries in areas that have been historically underexplored.
Good to see you, Alex. So you're back in early June, I think. Also seen a few press releases come out. I think last time we talked, it was just that point, wasn't it? Small company, lots of projects. What do you focus on? It'd be great to get an update from you. Where should we start? I think we've got to start with Eric Sprott, haven't we?
Sure. Yeah. I mean, that's kind of some big news there. Eric came in recently for a $2 million placement. It was an inbound call. He called us and said, listen, really want to take a piece of your company. Today, even he just invested $48 million into Newfoundland gold. So he's very big into Newfoundland plays. We have the Toogood project, which is a 118 square kilometer land package, about 100 kilometers north of where Newfoundland gold's drilling. And we've made some recent interesting discoveries. Haven't drilled it yet, but it's looking very promising.
So what have you done there? Because I saw a pretty chunky number on there in terms of, high grade surface trend. What does that actually mean?
Yeah, so that's kind of interesting. So we did do a couple first pass runs at some areas that had historical gold showings. So actual visible gold in the ground at surface. And so our team went on the ground there once the Eastern Atlantic bubble opened up and we could get our people there, and immediately made a discovery. And it was around 200 grams per ton. And then about 40 meters away from that in a boulder, there was a over 7,000 gram per ton, almost 8 kilo grab sample there. So we sent the whole team down there and talked to the local geologists and sort of discovered that this area that we're looking into was underwater. And so this what we're calling a grab sample, it's a boulder, but it's not necessarily from, northern Labrador. It's actually from an area that's very close to where we're sampling right now.
So next, tell me about that, because a boulder, it could come from anywhere. Some presumably somewhere nearby, but it could come from anywhere. So how do you view that?
Yeah, so that was our first question. When we got the result, we're like, this is fantastic, but where is it coming from? Because you've had these glacial movements, right? So you could have it coming from Quebec all the way down to the property. And so that was our first question. That's why it took us a little while from the actual moment of discovery to the press release to make sure we knew what was going on geologically. And so we actually had the geologists from the Newfoundland government come with us and explain to us what was the history here. And about, I think it was 10 or 20,000 years ago, this area was underwater. So any sort of glacial till that would have been there would have been washed away. And so what we see here is in situ. So it's coming from very close by. So these boulders are not coming from 100 or 200 kilometers away. They're coming from right there. Okay.
So Eric's put in $2 million and he's invested heavily in the area, especially with the Newfoundland project, because that's not his first money into Newfoundland. What's his expectation of you? Because $2 million to him is pocket change. He's got loads of those bets placed. Is he telling you what his expectations are, or is it just, hey, I trust you, get on with it? And if so, what are you getting on with?
Yeah, I think the expectation is that we drill the project, right? So we've got the team that can do the exploration work, and we can drill it immediately. But what we want to do first is make sure that we systematically explore it. It's a big property. And in the first place we looked, we found gold. So great. I mean, you could throw some drill holes down there, but it's probably not the most effective way to do exploration. So we actually brought on a technical advisor to the team recently. His name's Jody Gibson. He was actually the Yukon Explorer of the Year in 2020. And this is his bailiwick. This is his area of expertise. So, he's made discoveries in the Yukon. He's worked with our team before, with Rob Carpenter and the rest of the exploration team that we've got. And he was a great sort of complement to what we were doing. And so if it's there, Jody's going to find it.
Okay. And he's got enough money now, presumably, to do, because that $2 million is specifically for the Toogood project, right?
Correct.
Specifically, right. So he's got enough money to do what he needs to do. And if so, when you say if it's there, he's going to find it, what is the first step? What is he going to do?
Right. First step is obviously prospecting to make sure you have enough targets. Right now, we've announced 2 targets. That's probably not enough to start a drill campaign. So we're going to look for at least 5, if not 10 targets on this big property. And then we're going to do systematic exploration. So that includes trenching across the veins that we're seeing. And then we can do some drilling after that.
Okay, I guess more of that as Jody gets his feet under the table or feet in the field and gets going with things. Let's talk about copper porphyries, because that was the other bit that caught my eye, if you don't mind. So what's the update?
Yeah, so we did drill Perk Rocky in about June, July time, and it took a little while to get the assays back, but we finally got them. We drilled 6 holes for just over 2,000 meters. We didn't hit a home run like we were hoping to. We had our fingers crossed. It's a large area, 8 kilometer by 5 kilometers, and you're poking 6 tiny little holes in there. So, what we got back were very interesting, highly altered drill holes. We did come across some faulting in the areas that we were drilling. So it just changes the model. So we're looking at it again. It's still very interesting, lots of smoke, but it's kind of back to the drawing board at this point.
So lots of smoke, meaning technical success, but we got to start again.
Correct.
Okay.
Yeah.
So what are you going to do?
Hey, we've got this. What are we going to do? That's a great question. So it's we're going to remodel the project with the new results that we have, and then make an assessment. We do have a lot of interest from joint venture partners who are looking at it. These types of systems are typically very large, require large amounts of capital to drill, and so we have to make the decision: do we want to spend another $2+ million each year? Or is there someone else that can come in and partner with us? So right now, that's sort of the question for us. That
starts to get interesting, I think, because again, we come back to, I think we spent a lot of time last time week, and I was like, nine projects. How do you possibly afford it? Where do you focus your time, energy, etc.? How do you monetize it? So strategic partner we talked about it last time as well. So if you've been successful with the holes you drilled, you'd have been like, well, maybe let's do a little bit more. But you think you need someone with a different skill set and a different balance sheet to help you monetize that.
Absolutely. And that was some of the feedback that we had even going into this was there's not enough data. It's great. You've got alteration on surface. You've got all sorts of different mineralization that kind of points to porphyry. But until you kind of drill those holes, you don't really know. And even though it wasn't a slam dunk here on the first phase exploration drilling that we did, it was still information, and that information is very useful.
Okay, so that's project number 2. At least you look. We're not knocking it. Mining's tough, and sometimes it works, sometimes it doesn't on drilling, and that's fine. But you've got to work out quite quickly as a small company how you prioritize things, and more importantly, prioritize and allocate your capital. So, what's project number 3? I'm guessing Quebec.
Correct. Yeah. So we just put out a news release last week talking about our Shefferville project in Quebec. And that one it's a very large project. It's about almost 400 square kilometers, over 70 kilometers of strike length. It's a different type of target to what's at Toogood. Toogood is a very high grade, but in smaller packets. This one is an iron hosted formation. So that 70 kilometers is essentially an iron formation. And what we see on that is about 53 occurrences of gold. So anywhere between 1 gram per ton and 170 grams per ton. And if that entire area has, continuity of mineralization on it, that's a lot of ounces, a lot of tons of gold that you've got potentially sitting there. But again, this is very early stage. We've just done the first phase of exploration, which was just ground truthing, getting our people down there, having a look, taking some samples and coming up with targets. We've got 44 targets. So compare that to Toogood, where we have 2 currently and adding to it. So we have a very good starting point. So what we're going to do is we've immediately gone into phase 2, which is still, it's not drilling just yet, but it's still coming up with those initial targets that we will look to drill in 2022.
Okay, look, you're part of Discovery Group. You probably don't have problems accessing capital as and when you need it. But in this environment, even you guys must be thinking there's times where perhaps you just slow it down slightly, conserve energy, conserve cash, or you go and say, no, we're going to lump it all into Newfoundland because that looks super exciting. And the momentum's still there. So what are the discussions happening around the board table? That's
a really good one. Yeah, it is a balance, right? Because you never know. It's exploration. You can find out quickly. You drill a hole and you could kill a project. So we always have that in the back of our mind that as great as a project looks initially, it can fall apart very quickly. So definitely looking at the market, you have to do it because that's our lifeblood. We have to have access to capital. And so what we kind of balance is what is the prospectivity of each of these projects? How quickly do we need to advance them? Because the quicker we advance them, the quicker we run out of capital. And so even though right now we're sitting on about $8 million of working capital, we don't want to, we've got 9 projects and you can easily spend 2 million on each one, right? So we would run out of money immediately. So we're kind of making sure that we advance each project, find out which one is the top priority project and which ones are secondary, tertiary. And then that changes as you advance those projects. So something that could come out of the blue. I mean, Toogood was one of those where it was kind of just sitting there. And then right away, the first step exploration program, big discovery. So it changes. And as your share price goes up, it also changes the cost of those properties that you've got options, right? So if it's not meeting that threshold and you've got a 1 million share payment coming and your share price is trading at 50 cents, that's a lot of money. So you got to make sure that project is worth what you're about to pay for it.
It's really, I think that dynamic or that conversation around that dynamic is really fascinating for companies of your size, right? Because it doesn't take too many mistakes for it to go horribly wrong. But at the same time, you've got the kind of the safety and the comfort of the discovery group behind you. Are you getting the guys who are chipping in with their thoughts from some of the other companies?
Oh yeah, absolutely. Yeah, I mean, John Robbins was very interested in Perk Rocky and wanted to see the results as soon as they came out. That one, it's been around for a while and a lot of people know of it. Same with Steve Swatton at K2. I mean, he was looking at that as well with a lot of interest. And so, yeah, they definitely look at, we all share our press releases with each other after they've gone out and kind of come up with ideas of what another way to look at it.
Right. Okay. No, I just find it interesting. So look, going forward, right, when you're this size, you got to be agile, you got to be reactive to the data that's coming back in. But at the same time, you've also got to help the market understand what type of company you are, right? What are they buying into here and what the potential model for you going forward is? Because we're starting with a lot, you'll very quickly want to work out what you offload and what you focus on. But in that period before you do, it's like, am I buying a project generator, an explorer, or is this potentially something bigger with scale further down the line? Because you're, again, harking back to the discovery group, it's a mixed bag, right? There's some big deals there, some not so big deals in there. So that must be part of the frustration at this early stage in terms of how you manage that narrative.
Yeah, I wouldn't say I'm necessarily frustrated. I think it's, if you've got investors who misunderstand your model, then definitely you have to explain it. And I want to make sure that I'm completely open with any person who comes and looks at it and says, oh, wow, you've got a big discovery in Newfoundland. Well, okay, let me explain that to you, because we don't have a resource, right? So there's nothing there that's necessarily concrete. It's exploration. And what we're trying to do is lower the risk and increase the probability of success. That's all we're trying to do. We don't have any guarantees. It's exploration. It's, look at the success rate out there. It's very low, but we think that we've got the right team. We know how to allocate capital efficiently. And we've got projects that, we've done enough work on them to know, and we've got enough history behind a discovery group that your probability of success is higher. And so your risk reward ratios are better than if you just had one project and you're going to spend $10 million on it, and who knows where that $10 million is going to be spent.
Okay, look, appreciate you coming on. What are we looking forward to? You got $8 million in the bank. What are we looking forward to in the next 6 months? What should we be looking out for? Yeah,
so I think Toogood definitely is our most top priority project right now. And so we'll be looking to do an update there in the next week or two, giving an update on the trenching that we've been doing and what the plans are for drilling. In Shefferville, we've already put out a news release saying we're going to be advancing to phase 2 and then looking to drill it next year. So I would say Toogood is first up, and then Shefferville is kind of number 2. As well with Perk Rocky, continue to advance that and look for what the plans are going forward. Are we going to advance it? Are we going to get a joint venture partner or some other machination? And then the rest of the portfolio is kind of advancing, but until we make some kind of discovery, we won't really be talking about those.
So some kind of discovery anywhere in the portfolio.
Yeah, I mean,
you can monetize that.
Correct.
Right. And okay, allocate capital accordingly. Okay, great. Look, Alex, appreciate you coming on. Stay in touch. If there's any news, pick up the phone.
Absolutely. Thanks for having me on.